Today's Talk About It Tuesday question is, I've heard that there are other nations such as China, Russia, and I believe Iran working to replace the US dollar reserve currency status with their currency. I don't think this is likely, but should it happen, what steps do you believe we would need to prepare for? What factors should we be watching out for? And how much do you believe our strategies for investing would have to change? All right, a lot to unpack there. But first of all, let's deal with some basic fundamental economics and understand what reserve currency is and how the U.S. got that status as the reserve currency for the world. So we have to go back to World War II. And if we look at World War II, most of the world was in shambles, right? So a lot of the world was still underdeveloped, but we also have Europe, which was destroyed by the war. We have most of Asia, which was destroyed by the war. And so the United States, who was virtually untouched in terms of destruction in the war, we only had one attack on U.S. soil, which was Pearl Harbor. The United States at the time was a stable country that was producing 50% of the world's GDP, gross domestic product. And so we were major exporters to the world. We were a stable country. We were a built up country. And so 44 countries got together and decided that the US dollar should be used as the reserve currency. And what does that mean? That they would exchange their own currencies, which were unstable. In some cases, the inflation was out of control. So the currency wasn't worth a lot due to the results of the war. That they would all purchase US dollars and hold some in reserve and use that to trade with each other, because now you have a stable currency. You don't have to worry about the risk of losing value in your trades. It will be used to purchase or set the price of commodities such as oil, which is major, and gold at the time, because most currencies were backed by gold. Even the US dollar at that time was backed by gold. And so you had the situation where it created stability around the world. It minimized currency exchange rate risk, and allowed for economies to grow because their currencies were now attached to the US dollar. So let's fast forward. Now we're here in 2023, and much of the world is developed. There are many more stable governments and stable currencies, and there's a certain amount of economic power attached to the US dollar being being the reserve currency, because now in comparison to other currencies, it has much higher value. That has its pluses and minuses, right? As a plus, because our currency, our exchange rate is greater than other countries, we are a major importer because we can get a lot of goods and services relatively cheap because our currency is worth more. The flip side of that is we no longer are a major exporter because our goods and services are too expensive in relation to the value of the currency of other countries. So it has its pluses and minuses. But as a power move, right, the U.S. adversaries, China, Russia, Iran, want to decouple all the commodities and debt and trade away from the US dollar. And of course, they would love their currency to be the one that every country purchases, because that would make their currency value increase. So let's talk about the chances of that happening. Let's just eliminate Iran and Russia, not only because their economies are way too small, not only because of the human rights issues and the sanctions that have been imposed upon them. Like Russia, neither of those countries can even do banking with the world, right? They're not even in the banking system because of sanctions that are against them. And their governments aren't seen as safe, fair, or stable. So not a chance in the world that Russia or Iran will somehow have their currencies take over as the reserve currency to the world. Now let's look at China. China is a huge economy. However, intentionally, China has kept its currency value extremely low in relation to the dollar. Why? Because China's economy is based on exports. So because their economy is based on exports, and again, manufacturing creates exports, which creates jobs for the people of China, the government has intentionally kept that low so that they can remain a major exporter to the world. If they suddenly became the reserve currency, the yuan would go up incredibly high, which would make them too expensive to buy from in terms of trade, and that would ruin their economy. Not to mention, they hold a tremendous amount of U.S. debt in terms of treasury. So they have a lot of U.S. money attached to it. They would lose all that value because the value of the U.S. dollar would plummet, and therefore their treasury value, all that would plummet. So they would lose. They could do it to be spiteful. They could try, I should say, to be spiteful. But the world's not going for that. Nobody wants the yuan to be the reserve currency of the world. And matter of fact, most people buy other currencies. The euro is probably the second largest reserve currency that countries hold on to. So the likelihood of it happening, switching over to the Chinese or the Russian or the Iranian currency, is slim to none. Let's just say none. It's not going to happen. But let's suppose there was the euro or some other currency became the reserve currency because people lost faith and confidence in the stability of the U.S. dollar, meaning they lost faith in the economy, the U.S. economy, or they lost faith in the U.S. government. Perhaps they decided, okay, maybe the euro should become the reserve currency to the world. How would that affect what we do? Well, clearly then holding cash or cash equivalents would not be a good idea in terms of your investment strategy, because we would lose significant purchasing power of the dollar. So holding on to currency would not be a good idea. Buying U.S. Treasury bonds would suddenly not be a good idea. So in terms of a lot of the fixed income things that are attached to the dollar, probably not the best idea in terms of keeping those in your portfolio. In terms of shifting how you would get into equities, meaning company shares that you own, stocks, then we would see a shift, right? Because U.S. exports all of a sudden would become cheaper. However, companies that relied on imports from other countries for their parts, for their labor, would suddenly become expensive, right? And so we would see a shift. We'd have to shift the types of companies that we invest in. It would probably make American labor cheaper, and so you might see an increase in American manufacturing. So you might shift to some companies that produce domestically. But again, not going to happen, so I wouldn't even contemplate it too much. But yeah, you would definitely have to make some shifts. You definitely move out of cash. You definitely shift the companies that you rely on currently, especially the tech companies who are heavily reliant on imports from China and these other places. They would have to shift their supply side, which could definitely affect those companies. And yeah, so your portfolio would have to kind of turn around in a major way, but not gonna happen. But I love the idea of contemplating the what ifs, because that's important. You have to look at all possibilities of things that could happen so that you strategize properly, because strange things do happen, but I don't think that's one of them. So I love the question, love to hear your comments, love to hear what you would do differently if the U.S. reserve suddenly was not the reserve currency to the world. Please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.